Hey everyone, welcome to our channel Digital Learning. Here, we cover daily crypto market updates, in-depth news breakdowns, and easy-to-follow tutorials to help you understand and navigate the digital economy. Today, the crypto market is buzzing with major developments, and I'm here to break it all down for you in a simple and actionable way. So if you want to stay ahead in crypto and make smarter decisions, you're in the right place. Let's dive straight into the latest updates. The US SEC, led by Paul Atkins, has officially launched Project Crypto, a sweeping initiative to modernize securities rules and bring US markets onto the blockchain. Announced at the America First Policy Institute on July 31st, Project Crypto aims to provide clear, modern rules for token classification, custody, and trading. This marks a major shift from the previous enforcement-heavy era under former chair Gary Gensler. Atkins emphasized that most crypto assets are not securities, and he wants to make it easier for tokenized securities and ICOs to operate within U.S. markets. The plan includes new rules for super apps that combine trading, staking, and lending all under one license. This initiative ties directly into the White House's 160-page report and the recently passed Genius Act, supporting stablecoin regulation and asset tokenization. It's part of a broader effort to make the U.S. the world's crypto capital. Industry leaders welcome the shift, calling it a bullish era with reduced regulatory risk and greater innovation. Clear rules, tokenized trading, and on-chain finance could attract companies back to U.S. soil, boosting institutional participation and potentially lifting crypto prices. $1.11 trillion wiped out from the U.S. stock market. In just one day, the U.S. stock market lost a staggering $1.11 trillion in market value. But what caused this massive drop, and what does it mean for investors? The U.S. stock market faced a heavy sell-off, with major indexes like the S&P 500, NASDAQ, and Dow Jones all tumbling. This sudden crash wiped out over $1 trillion in market capitalization. The main culprits: rising bond yields, renewed inflation fears, and uncertainty about Federal Reserve interest rate cuts. Despite pressure from Trump, Jerome Powell did not lower the interest rate, which caused a strong market reaction and ultimately led to a crash. Higher interest rates make borrowing more expensive, which hits growth stocks and tech companies the hardest. That's why big tech giants like Apple, Microsoft, and Nvidia saw billions wiped off their valuations. President Donald Trump demands removal of Jerome Powell from Federal Reserve of U.S. Impact on crypto. When stock markets fall, risk assets like crypto often feel the heat too. Bitcoin and Ethereum also saw short-term declines as investors moved to safer assets like bonds and gold. Globally, markets in Asia and Europe followed U.S. trends, showing just how interconnected everything is. President Trump has announced major new reciprocal tariffs affecting nearly 70 countries, set to take effect on August 7th. Tariff rates vary by region, from 10% in the EU and UK to as high as 39% on Swiss goods. China condemned the tariffs as protectionist, warning of global economic harm. Taiwan described its 20% rate as temporary and is hoping for reductions under future deals. Global stocks dipped as investors reacted to rising trade uncertainty. The NASDAQ and S&P both declined sharply following the tariff announcements. Switzerland's government held an emergency meeting after Trump slapped a 39% tariff on Swiss exports, causing ripple effects through the Swiss luxury goods sector. The tariffs have generated approximately $124 billion in revenue for U.S. authorities so far this year, but also raised importer costs and consumer prices. On the same day, the U.S. Labor Department reported only 73,000 jobs added in July, far below expectations. May and June job figures were revised down by 258,000 combined, highlighting a weakening labor market. Unemployment rose to 4.2%. Bitcoin holders bleed as daily inflows to Binance approach 7,000 BTC. Bitcoin exchange inflows have been on the rise for over a month, and the recent BTC price drop has prompted nervous sellers to increase their activity. Both short-term speculators and large holders, or whales, are moving coins to exchanges, pushing Bitcoin below $112,000. Analysts warn that continued whale selling could trigger a deeper, prolonged price correction. Exchange order book data shows significant market exits, though Bitcoin is attempting to reclaim the $114,000 level. On-chain analytics from CryptoQuant reveal that both new investors and whales are transferring BTC to exchanges. The recent dip to 3-week lows has heightened panic, resulting in a rush to sell. CryptoQuant reports that on August 1st, short-term holders sent over 40,000 BTC to exchanges at a loss, the highest level since July 15th. Total net inflows reached 16,417 BTC that day, with the exchange whale ratio surpassing 0.70, indicating most deposits came from whales. Analysts note that when whales dominate deposits, markets typically experience heavy selling pressure and rapid declines. If this trend continues, further price drops are likely. The surge in inflows has been building since early July when BTC first broke above $110,000. According to CryptoQuant, average daily inflows to Binance have climbed from about 5,300 BTC to 7,000 BTC, ending a downtrend seen since March and signaling a shift in investor behavior. Ether mega whales continue buying through weekend dip. On-chain data indicates that Ether mega whales, wallets holding over 10,000 Ether, have been aggressively buying Ether even during a price dip over the weekend. One mega whale address alone scooped up around 79,461 Ether, around $300 million, via OTC trades at Galaxy Digital. Since July, the number of mega whale addresses has jumped significantly. Over 200 new wallets holding more than 10,000 Ether have appeared. This marks a strong accumulation trend at scale, shared by both large custodians and exchange-linked addresses. Whale accumulation typically signals high conviction in future ETH upside, since these players often buy dips and hold. Historically, strong whale buying has preceded major rallies, as seen in 2022 and earlier Bitcoin cycles. Ethereum briefly dipped below $3,400, then rebounded to around $3,560 as buying continued. The buying is happening despite short-term market turmoil, suggesting a strategic long-term view by whales waiting to capitalize on the dip. This whale accumulation coincides with strong inflows into ETH-focused products, including a 40% rise in ETH held by spot ETFs over the past month. BlackRock's iShares Ether Trust recently logged over $17 billion in recent inflows. Whale accumulation sets a bullish tone, especially when institutional flows support the narrative. If ETH clears retracement resistance around $3,500, a rally towards 4,000 plus remains possible. That's it for today's crypto market update. The market is moving fast, with big players making big moves, so staying informed is key. If you found this video helpful, make sure to hit that like button, subscribe to the channel, and turn on the notification bell so you never miss an update. Drop your thoughts in the comments. Do you think whale accumulation will push Ethereum to $5,000? Thanks for watching, and I'll see you in the next video. Stay informed, stay smart, and stay ahead in crypto.